We're positive on the ability for Bitcoin and digital assets to remain resilient through a rate rising environment.
I don't think it'll be a currency. I think it will be a store of value. Okay. I think there'll be other, listen, Ethereum is already trading like a currency, right? It's the currency of culture. When people buy NFTs, they say, how many ETH do it cost?
Hey guys, welcome back to Wealthy Value. Today's video is sponsored by Margex. We heard some really great things about this new crypto exchange. Their tech seems really impressive. It allows you to trade with 100x leverage. It has price manipulation protection, and it conducts up to 100,000 trades per second, which is pretty amazing. So we decided to test it. As you can see, this is the dashboard. I was really impressed with the user interface. It's really user-friendly. As you can see here, you can place the trade. You can do up to 100x leverage if you're, of course, comfortable with the risk. Here in the wallet, you can deposit crypto. As you can see, you can deposit any of these cryptos. You can pay with Visa. Then another thing that I really liked was the support that allows you to talk with a real live person. There's a cool documentation section and also some really good video tutorials to help you getting set up with the platform. So all in all, I think it's a great platform. You can also get a $50 bonus if you join with the link in our description. And you can also get an additional $50 if you deposit 0.004 BTC. So if you want to try it out, the link is in the description. Now let's get on with our video.
We know the game. It's a long-term game. I was looking at the charts of Bitcoin, and it either kind of bases around these levels, or that wedge that you're looking at breaks lower, and before you know it, we go back to the 250-week exponential moving average, which is 22,500. If this is 2018 again, that's pretty much what it would do. It'd have another sharp spike lower to hit that 250-week moving average. I don't really know. I thought that it should be basing. What's really interesting, you've thrown 8% inflation, you've thrown war, you've thrown 6.5 or 7 rate hikes priced in, you've thrown everything at it, and the market's not made new lows. That's a positive, but maybe that's just a false hope. Who the hell knows? I spent a long time looking at what is the predominant driver of price of crypto, and I came up with the fact that it's the amount of volume kind of multiplied by the number of wallets. And that is a good fit for pretty much everything, number of active wallets. So we need, for the price to increase, we either need daily volumes to increase or the number of active addresses to increase. Right now, we've got neither. So we got to think, okay, how will we drive that? We either do it from further retail participation, but in an inflationary environment where real wages are negative, it's difficult. So therefore, it would have to be institutional. Don't forget, 32 billion last year went into VC because they couldn't put it on their balance sheets, and it's easy to do VC. So that tells you there's pent-up demand from institutions, but the reality is they just don't want to own Bitcoin on their balance sheet. One of the things I've done on the side is built a fund of funds business that invests in crypto hedge funds, because you need institutional product right now. There's no institutional product. They're not going to use the ETFs because they're all futures based. One of the things that I think people haven't talked about is this rise in prices is a massive tightening of monetary conditions. From my expectation, I think we've already hit 200 basis points. And that's why the yield curve is essentially zero. So the ability of the Federal Reserve to raise rates without a recession is pretty close to zero. So therefore, if a recession or something close to it is already being priced in by the yield curve, then demand should come down anyway. So I'm actually less of an inflationist over time. I think more of the inflation argument, or more of the inflation was driven by the supply as the world came back online again and there was restricted supply. So I don't think the Federal Reserve could have done a lot differently. I think you would have taken some of the inflation out for sure. Well, if you go back to every tightening phase from the Federal Reserve, the market tends to sell off about between 15 and 28%. And we're kind of in that zone. So should it go any further? If we're in a full recession, then it's different. But we also have the reaction function from central banks when we get into recession, is they're going to use the balance sheet. Now, we might see direct transfer payments, i.e., tax rebates or whatever version to offset the energy costs and the inflation costs. Well, that's actually a net printing of money. And I think that's a positive for the market that's likely to come. So the macro markets are actually quite difficult to trade right now. You know, the dollar feels like it's going higher, but I think it's not going to be in a straight line. Bond yields, I think, will probably top out somewhere between here and 225 in the 10-year bonds. But we're kind of still a bit in no man's land. We sold off, didn't really stick in terms of yields. You know, it's not an easy place. But I'm trying to sit patiently. I'm long a bit of bonds, long a bit of gold, and long crypto, and long some dollars, and just kind of waiting to see. I don't think it's the time to take aggressive bets yet. I tell you, Ram, what would be interesting is asking the audience, because one of my hypotheses is retail investors, everyone's got negative real wage growth. So everyone's getting squeezed right now. So I wonder if the audience is getting squeezed on their income and they've got less money to invest in crypto or not. Well, the problem is Bitcoin, unlike gold, has two qualities. One is the store of value quality, and the other is the growth quality. You know, what can the network be used for, the new technology, and those things are always interplaying. So this is why you see this kind of schizophrenic nature of Bitcoin and crypto overall, is it shifts narrative. So it's not correlated all the time. So we have passing correlations as opposed to total correlations. 2020 is not a good example because it was a 2-month recession and it was met by the largest stimulus the world has ever seen. So you need to go back and look at 2008 and 2001-2 and look at how long a bear market lasts if there's a recession and how deep it was. In those cases, they're generally 50% downside and they tend to be 18 months long. Don't forget, the reaction function of central banks has changed now. So they tend to be faster on the trigger, but this one's different because we've got high inflation. So there's a lot of unknowns for all of us in this. We don't know their reaction function well enough yet. You know, the riskier end of the curve, you know, I had thematic strategies. So I had DeFi, I had some metaverse, I had some layer two, some layer ones, but mainly, you know, it's 80% ETH. The riskier end of the curve got killed. Some of the metaverse stocks did pretty well in a bear market for a period of time. That's fine. And only so therefore, if I think of the risky side of the market, I took a small amount of risk in that. You know, I then topped up with ETH calls because that was I thought we had a decent probability chance of an upside break at the back end of last year. Didn't happen. So lost the money in the calls. Looking to allocate more over time slowly, because this is not a market I try and time, because I'm not really interested in that. And, you know, I'm not a shorter term guy. So I'm looking where to allocate and how to allocate. I'm still struggling to find a better bet than ETH as a risk-adjusted reward over, give it a 12-month time horizon. Yes, others will do better. I think also we're going to get the Bitcoin ETF, the spot one out. From what I'm hearing through back channels, that there's at least 2, maybe 3 that are going to get approved. Now, that doesn't mean that people rush into that because Bitcoin's going down, so why would they? We're getting very close. And, you know, Gensler's statement this week or last week, whenever it was, I've lost track, was very positive for this kind of stuff, which is, we get it, it's here, it's not going away, we'll regulate it carefully. It's just all the right steps. It just facilitates a bull market, but I doubt it turns around a bear market because it makes no difference because retail already own the stuff. And institutions, they tend to prefer, we might get more allocation, a bit more allocation, but they tend to prefer to see the price turn around.